Hey everyone, Simon Says Money here. Welcome back to another video. Today, I'll be discussing some SPACs that you should consider. Before we get onto this video, don't forget to like and subscribe and turn on that bell notification because I post content on the stock market and investing. As a disclaimer, I'm not a financial advisor or CPA. Please use your own investment decision. Let's make money together and be on our way to financial freedom. Let's get back to this video. March 8th, NASDAQ roars back 3.6% for its best day in 4 months. The S&P 500 adds more than 1%. And also the Dow Jones Industrial Average closed the day near its session low, rising just 30.30 points or 0.1% to 31,832. So all green days for all the three indexes. Over the weekend, the Senate passed a $1.9 trillion COVID relief bill that contained the $1,400 stimulus checks for many Americans and $300 a week more in jobless benefits, as well as aid for state and local government. The measure passed in the Democratic-held House on Tuesday. It would then be sent to the President Biden's desk before a March 14 deadline to renew unemployment aid programs. This is definitely good news to the stock market. Hopefully, this will not create a worry about a sharp acceleration in inflation because of this $1,400 high savings due to staying at home for such a long time and the pandemic being almost over. Because any concern on inflation will lead to pressure on the Fed to plan for a rising interest rate, which is extremely bad to the market. Since mid-February, the stock market has been in a turbulence. Now, one of the best stock categories we can play is SPAC. We can call it defensive stocks. Let's review it quickly. First, we need to understand a SPAC's pricing system, pro rata share of trust account. One thing to keep in mind is that if you purchase your shares on the open market, you are only entitled to your pro rata share of the trust account and not the price at which you bought the SPAC shares on the market. For example, if a SPAC had an IPO at $10 per share, but you bought 100 SPAC shares on the open market at $12 per share, the shares you purchased are associated with a trust account balance of about $10 per share, so your share of the trust account would be worth about $1,000, not the $1,200 you paid for your shares. If the SPAC cannot find a merger target within 2 years, you will get this $10 per share back. But once the merger happens, the stock price will be like a regular stock, meaning it can go very high, but it can go very low, even lower than a $10 per share. Therefore, if you can find a SPAC which has a great team, a target merger already, and close to the $10 price range, this SPAC is a defensive stock having great potential of reward. In my previous video, this one I presented, according to a study of the 115 completed SPAC mergers from 2016 to 2020, 65% of their stocks had declined a month after the merger closed. Therefore, I would sell the SPAC stock shares once the official announcement is made about the merger. Buy on the rumor, sell on the news. And we can also note that 71% of the SPAC post-merger were down in the next year. Today, the first two SPAC I'd like to present are Chamath IPOD and IPOF. Chamath Social Capital, head of Sophia Holdings Corp, has successfully brought these companies public through SPAC approach. It is a long list. Recently, IPOE has announced to have a merger with the fintech company SoFi. So looking at this list, we have some clearly popular stocks: Clover, CLOV, Virgin Galactic, SPCE, Opendoor, MP, DM, INSU, ACTC, TSIA, SPRQ, and the merger with fintech company SoFi. IPOD and IPOF don't have merger targets already. Share price is between $11 and $12, which is relatively close to the baseline price of $10. Chamath's reputation and experience in dealing with SPACs make him very credible. So I would say let's buy these two SPACs now when their share price is close to the $10. And once the rumor comes out, usually the share price jumps up to 40, maybe even 50% very easily. My second SPAC I want to present here is Foley Trasmine Acquisition Corp, ticker symbol WPF. Its share price now is around $10.24, almost at the baseline of $10. It will have a merger with Alight, which is a leading cloud-based provider of integrated digital human capital and business solutions, serving more than 30 million people and their families. Alight serves 70% of the Fortune 100 and 50% of the Fortune 500 with long-term contracts. The SPAC owner is Bill Foley, who successfully brought multiple IPOs public, including the BFT, which brought PaySafe to IPO. Therefore, I would not think that we can lose much if we buy WPF at this price, and reward could be huge. We all know that the SPAC stock CCIV has successfully brought Lucid Motors to the public a couple weeks ago. CCIV shares surged to over $40 before the official merger. Then it dropped about 40% when the merger happened. Again, my number here was correct. 65% of their stocks had declined a month after the merger closed. It is good to know the nomenclature here. CC stands for Churchill Capital and IV is the Roman numeral 4. Therefore, CCV is the legendary Michael Klein Churchill Capital 5th SPAC to bring to the public. The news ticker symbol CCV. Its share price is about $10.30, a nearly baseline price. And I'll be following this SPAC as we get more information and see where the stock is going to go. Okay, let's talk about our next SPAC. Osprey Technology Acquisition Corp, ticker symbol SFTW. Share price is about $10.89, dropped from as high as $16 a few weeks ago. Rumor said SFTW is planning to have a merger with BlackSky. BlackSky provides global monitoring services. They have their own satellites to provide all kinds of services in the monitoring industry. Their main customers are governmental agencies, big companies, NGOs, rescues, mining industry, transportation, and etc. BlackSky has been growing the last quarters and years with revenue growth of more than 100% in 2020 as compared to 2019. I believe that this SFTW SPAC will be surging once this turbulence of the stock market is over. The next SPAC is 10X Venture Acquisition Corp, ticker symbol VCVC. VCVC successfully brought these companies to public: DraftKings, Shift, Palantir, and Wish. We are all familiar with these companies. It shows the experience of 10X Capital Acquisition and dealing with successfully bringing companies to the public. REE Automotive, an Israel company, is to list on NASDAQ through the merger with 10X Capital Venture Acquisition Corp. And on the investors.re.auto website, we can see that RE is an automotive technology leader set to become the cornerstone for tomorrow's zero-emission electric and autonomous vehicles. So great highlights, great technologies that we are looking at right here. VCVC's share price was at $16, now at around $10.30, nearly at the baseline price of $10. I believe because REE Automotive's business is pretty innovative and applications are wide and growing, and most importantly, they can tell an excellent story about their technology and products. As you know, being able to tell a nice and attractive and imaginative story is extremely important at the stock market to enable the boost of the stock share price. Those are the SPACs for today's video. I really appreciate your support by liking and subscribing to my channel. Let me know in the comments your thoughts on these SPACs and let me know if you have any experience with them. Again, thanks so much for watching this video and I'll see you guys in the next one.